Hi guys, I thought I'll just show you a simple process of how I select my monthly trades. So after the election results, the volatility has decreased, and now would be a good time to take your monthly trade for the month of June. So the first process is to identify points, and the first place where you identify points is on the chart. So normally I take Nifty 50 index trades. So right now what you see is a daily chart. Since you are taking a monthly trade, it is always good to go on a daily time frame. So if you see over here, this is the chart for 2024, and basically you identify the supports over here. This could be a major support, right? And on top you have this as the highest. That means when the exit polls were out, this was the high and was rejected from there. The market rejected that particular high from there. So these are the 2 points on the chart. Also, you can check for minor supports in this region, somewhere over here. I think we'll keep that as more of a dashed line, right? So now we have somewhere at 21,300. On top, we have 23,350. And then you have a minor support over here at 21,700, 750 region. Now the next step is to actually go into the open interest chart and see where the volumes are being built up. So since you're taking a monthly trade, it'll be better if you can get a more broader view. Okay, so if you look over here, the maximum bearish volumes are at 23,500, and then the maximum bullish volumes are at 22,000. So we'll just denote that over here. So we have a 23,500. Okay. So keep it over here. This is 23,300. Oops. 300. This is 22,000. This is 21. Let's put it at 21,700. And at last we have 21,300. Okay. Now let's see these points in the option chain and see if there is enough price in it. Okay. Now after you have taken that, you will have to see those levels. So we had 22,000 over here, which has around 109 rupees of premium left in it. Then on the downside, what we had was 21,700 and 50, which was around 74. And then you had below 21,300, which will be at least 40, 30 rupees. Okay. We could just jot down the premiums that are available on that particular chart. So we had 22,000, which is at 108, 108, and 21,700, 773, and 51. and on top we have 23,300 and 23,500. So that we'll have, since that is on the top, we'll be selling call options. So 23,300 is at 195 and 23,500 is at 135. So these are the levels, premiums on these levels. Now we just basically enter expiry, change it to 27 June, and then our points where first one was 22,000, sell that, and on top we had 23,500, right? So if you look at this particular chart, what we see is we will be using, for doing this trade, we'll be using around 52,000, 58,000, and then the maximum profit out of this would be 6,000. And right now the market is at 22,850, and if it goes down, we have around 4.5%, 7% downside. That is 21,700, which was basically our point over here. This is 21,700, and on top we have 23,742. That's slightly above this 23,500. But since it is a monthly trade, it would be more wise to take it a little more away. So instead of 22,000, let's go a bit deeper. So I'd say somewhere around 21,600, and on top, since the highest was at 22,500, we could look something in the region of 23,500 itself. Still, it will be a little bit close on the top side. I would not take 23,500 over here because it's just 3.6 percentage from where the market is right now. So I'd go somewhere in the region close to 23,900. So I think this looks comparatively safe. So if you look over here, the funds needed would be 50,000, and if the market stays inside this band, you'd be making around 3,155, which is close to 7% in a month. The probability of this particular trade is around 79%. So yeah, that's how you actually select a trade. I'll just zoom this out. So it looks kind of like this. So more or less both the premiums are at 66 and 60. So that's basically how you take a trade. This actually will be sustained till the end of the month. Now if this expires before that, if this comes close to, let's say, 20 rupees or something, I'd rather exit it than keep it more. So I took a similar trade yesterday, so I'll just show that to you. So it is basically, it's just most of my trades are done in another broking account. So this is basically just to show you guys what I've taken yesterday was 21,600 on the downside and 23,500 on the upside, with average prices at around 113 on upside and 96 on low side. I got these prices yesterday because the VIX was higher, so the premiums were also higher. So right now it's going like this. I'll also show that on the chart. So on the chart it would look something like this. So I had taken two lots, that's why the margin needed is around 1 lakh. And if you see the lower side of this particular trade is way back, since today the market has actually come up, and I'm inching closer to my upper band. So I'll have to, have a key eye on that. Basically keep some alerts. But for now, I think it is safe. But if it continues to go up, then probably I'll have to exit one side of it. So since this video is just about how to pick a trade, probably in some other time I'll try to show you about adjustments and all that. Yep. So yep, that's about it. So first thing, look at the charts, see the supports and resistance over there. Then look at the volumes, see where are the volumes giving support and resistance. And then you look at the prices, and then you select a reasonable, width of the trade and select it so that it gives you good returns, and also it is gives you higher probability of making that money. So yeah, that's about it. Thank you.